Ladies and gentlemen, traders and investors, hello and welcome back to our channel Polo Vega. On today's video, we shall talk about the behavior of gold versus silver. Both metals, being precious, tend to attract investors with huge profit margins one can make out of trades based on these metals as underlying assets. However, one needs to know that the two metals behave differently in the traders market precisely because of the use to which they put to. While gold is primarily used as a safe haven, as a hedge against crash in other security markets, as an underlying asset lying in vaults in the form of bullions or as jewelry in individual homes in all parts of the world. Silver, also precious but to a lesser extent as compared to gold, is found in vaults and in individual houses in the form of jewelry. But over and above these forms, its physical use in different industries, especially in the electronic industry, makes it totally different in behavior as compared to gold. Silver, if traded through ETFs, can behave as a double-edged sword and can whiplash in any direction because of sudden change in demand/supply of the metal or government interference to regulate the price of the metal. The volatility in the HER can be extremely high in case of silver and can gap up or down to take out the safest of the stop losses placed by traders. Therefore, it's highly recommended that regular small-time traders or retail traders stay away from the metal, and if they wish to partake in any trade based on this metal, they'd better be aware of the consequences that the trade can lead to. Before we decide to which trade is safe or which is unsafe, we shall visit the respective gold and silver ETF charts, which are XAU/USD and XAG/USD. Traders and investors, before we go into our video, let's go through the disclaimer/disclosure clause. The contents of this presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 29th of a series of interactive videos aimed at educating our viewers, and we'd like to warn all our viewers of the risk associated with the business of trading and investment. Securities, investment and trading is a highly risky business, and there exists a possibility of partial or total loss of investment. The ideas and opinions in our video are solely based on our analysis of the market, and we do not advise, recommend/guide anyone to take any trade based on the contents of this video, and we do not take any responsibility for partial/total loss arising out of trades based on the contents of this video. Before we come to a conclusion as to which of the two is a safer trade, let's look at both the charts, which are XAU/USD, which is in front of us now, and also the other chart, which is XAG/USD, which we've opened now. They seem to have a similar trend in the last 3 to 4 months. However, if you see the complete chart or complete set of candles for the last 1 year on the XAG chart, as we can see in front of us, we can see that this metal had been going sideways between 54 or 55 and 45 till it decided to break out from here, and then it gradually climbed up to the area of 70. Between 70 and 80, it managed to stay for about 2 to 3 weeks, and then it had a sudden surge or rally followed by a steep drop in the month of February. The sudden rally was purely because of the buyers following the trend in the gold market, which had been in an uptrend during the whole of 2024-2025. So this was the rally, the gold rally, which prompted the silver rally in the month of January, and then the drop in gold, as we can see, during the first week of February, which prompted the drop in silver as well. However, the drop and the recovery in gold has been in a different fashion as compared to one on silver. If you look at the silver market, the 4-hour chart here, the silver market has been more volatile as compared to gold, and the rises or the rallies and the drops have been sharper as compared to gold. As compared to gold, we can see that there is still a scope of silver to come back up into the area between 80 and 90, which is a nice seller's area controlled by the candle shown in the pink ellipse. If the male buyers in the next 1 or 2 weeks, with the current geopolitical situation and the indecisiveness of the Fed to cut rates in the month of March, can allow the candles to print a nice rally above 90, then we can look at the buyers again getting control of the market. In case of gold, we have a similar situation, but the difference between gold and silver is that the gold market has been making higher lows as compared to silver, which has been in a perfect sideways trend. In gold, although the top has been capped by the bearish pressure in the area between 5100 and 5150, which is the seller's area, then the bottom, however, has been showing higher lows one after the other, and if the geopolitical situation as of now and the confusion in the Fed rate cut decision allows it, if it breaks above 5150, then we can have a nice profit margin all the way up to 5500. But the buyers will need to wait for the candle to cross 5150 with a nice bullish candle and then drop back into the 5150 area for the buyers to join the uptrend, the newly set up uptrend. Likewise, in case of silver, we can see that it has been going up and down, but there are no higher lows established as we've seen in the gold market. Here, the bottom is being held by the floor at around 70, while the top is being held down by the ceiling between 80 and 90. This is the area of bears or the sellers, and it needs to print a nice bullish candle and close above 90 to re-establish the uptrend. However, the traders need to be very careful here, because your stop losses will need to go in the area of 60 as compared to gold, which has got a very small area for placing your stop losses if we want to go bullish. In case of silver, the stop loss for a sell trade has to go above 90, while the buyer's trade has to have a stop loss below 60 to be in a safe trading zone. Traders and investors, we hope that the video on gold and silver was informative enough and exciting enough for you to come back and watch all our videos. We shall continue with our assessment and analysis of different asset classes in the weeks to come, and would try to advise you with as much of clean, categoric analysis on different kinds of asset classes as possible. If you liked our video, please give us a thumbs up and press our button underneath to subscribe to our channel Polo Vega and watch all our videos. You may also come back and visit us at our website www.polovega.com or get in touch with us through our Twitter handle @PoloVega. Please keep saving, keep investing, and keep getting wealthier until we meet next. We thank you for watching our video. Please like, share, and subscribe to our channel Polo Vega.